Coming up on Over a Barrel, Ukraine has made their way into Russia, Iran may attack Israel, and Patrick, gas prices are on their way, what?
We'll save that for the episode, Matt, but they are moving.
Over a Barrel starts right now. And welcome to Over a Barrel, yet another edition of our podcast. Make sure that you like and subscribe if you're listening on, let's say, Spotify or your favorite podcast delivery method. We happen to also be on video as well. You can, of course, check out Gas Buddy's Facebook page, YouTube channel, all the different areas there. You'll be able to watch, and sometimes we'll show graphics, actually most of the time, actually. Patrick, how are you doing right now?
I'm good. You tell everyone about video. It's like maybe that's best kept untold that we're doing this on video. So if you're listening to us, we're also doing video. If you want to see the couple clowns behind the, what is it? The guy behind the curtains, right? If you want to come join us, hop on over to YouTube. But hey, I'm doing great. How are you?
It has been a long week. Yeah, summer is almost coming to an end. I know this because the sago palms that I have out on the back patio are starting their third ring of palm fronds, which means we're reaching the end of summer. That's how I gauge it. It makes me sad.
I know. When I go for walks, some of those trees are starting to turn a little yellow. So
already?
Yeah,
you are in Chicago.
I mean, either that or they don't want to live here either. The leaves are like, I quit.
Well, there is that. That's a possibility. Oh,
you know, my God. It's bad when the leaves are like, all right, I'm out of here.
I'm done.
Well, I mean, it is Chicago. So, we do have that. There's a little bit of that stereotype. But I'll tell you what, Matt, you know what else? In addition to the falling leaves, there's falling gas prices. I walked out to the local station, and we have well covered. Probably all the folks that aren't in the Great Lakes are probably real sick and tired of hearing us talk about this refinery. But finally, a lot of relief. Interestingly enough, the national average is down a couple cents in the last week. And Matt, I don't know about you, but I'm starting to get people on social that are like, oh, the election day is coming. Here we go. And it's like, nope, that's not quite the answer. That's the answer.
But the politicians keep saying they are the answer. Drill, baby, drill. Don't drill. Go to electric. I mean,
politicians are going to do their thing. Right.
But realistically, we are here to set the record straight, correct? Like that's
exactly what we're here to do. And let's take a look at the map here. What our data is telling us. Nice little 2-cent decrease, Matt. Now, keep in mind, look where we are compared to a year ago. I think a couple of weeks ago, we were basically on par with last year. But the good news is, for anyone that can remember a year ago, and if you want to look up our old podcasts from a year ago, you're welcome. The Corn Belt and the West Coast, and that caused prices last year to skyrocket. In fact, if I go over to here and do the biggest movers, compared to a year ago when we were seeing those, look at that. The West Coast down 83 cents from last year. The other nice thing, I hope, as I scroll this list, there's no red. No, look at that. Not a single state paying more than last year. Everyone, all 50 states spending less than a year ago. So, Matt, in the teaser, you mentioned Ukraine, the Middle East. There's a lot of things that we keep an eye on here that thankfully aren't really having any impact yet. It looks like it's been a really tough closing innings to the summer driving season for those trading commodities. Oil prices have been all over the map, but geez, not even the defibrillator can really get the gasoline market going right now. There's really nothing out there.
I sent you a picture the other day whenever I got caught in the middle of a price cycle in the wrong direction, and I sent you a picture of it because I'm like, I'm going to pay $2.89 a gallon, blah, 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 blah. I get to the gas station, it was $3.09. I was not happy with that.
And by the way, that price cycling did just happen also in Ohio last week. And again, we talk about that enough here. Let's quickly give folks, and I had somebody else ask, what the heck is a price cycle and where is that happening? For those that haven't joined us, and this is a graphic, we'll try to describe it to those that are listening. This is price cycling. This is Ohio. Ugh, that look ugly. And for those listening, again, this is a roller coaster ride, like literally straight up, straight down, straight up, straight down, straight up, straight down. And this happens in Florida as well. This is the price cycling. Yeah, look at that. Oh my goodness. So price cycling is just this constant roller coaster ride. What it is basically stations are undercutting each other day in and day out. There's actually a really good media story from a TV station in Indianapolis, WTHR. If you Google WTHR and price cycling, there is a video, like a really, Matt, they took like a week or two and they literally went to the gas station every day to show the sign on the pump. What happens is like every day the station undercuts at least 3 to 4 cents, and they keep undercutting their competition until they start losing money. They've undercut too far, and that's when you see prices suddenly shoot up. And if you look here, hopefully, let's see, Ohio. Yeah, so if we get rid of Ohio here on the map, look at that. See, prices in Ohio on May 19. Here's a great example: 361. And what? Early June, look at that. Every single day they went down. I guarantee you that the price of oil did not go down every single day from May 19 until June 9. But price cycling areas avoid the daily fluctuation. Stations ignore. If their cost goes up a little bit, they ignore it. All they're doing is basically engaging in a price war, Matt. And look at
So
that.
are you thinking this is a good thing for the consumer?
Well, it is, if you can time it right.
Yeah.
And that's, and that's the TV station that did this interviewed the head of the Ohio Convenience Store and Petroleum Marketers Association. He described it really well. He said it's really a buying opportunity because nowhere else in the country, basically, if you time it right, like Matt, just envision there's a line going through this. And for those listening, there's times when Ohio is way above the national average, and then there's times when they're below the national average. Yeah, look at this. So it's just a buying opportunity, really, if you think of it. And so, Matt, it becomes a thing about timing your purchase. And these cycles repeat every probably 7 to 12 days. So after about, if you notice when prices spike, start keeping track of the days. After about 7 or 12 days of declining prices, that's when they tend to go up. But if you notice here on this chart, prices didn't decline, for 7 to 12 days. This is a really long cycle, right? It's from May 19 to June 9. But then if you look, prices shot up and then they started declining on June 15th. That was a shorter cycle, only about a week. And then prices jumped back up. But yeah, Matt, you're in Kentucky. It's somewhat of a price cycling area. We're seeing price cycling in Denver. There's a lot more markets. St. Louis, Wichita, Kansas, Missouri, Kansas City.
I've noticed that most of these places, when they cycle up or down, it all seems to be almost in uniformity, where it's almost at the same time they go up, almost at the same time they trend down. Is there something going on that makes all these stations in all the areas do things at virtually the same time?
Yeah, I mean, here's a study on it. You know who did this study? The Federal Trade Commission wrote a paper on exactly this. It's basically a really loaded economic paper that they wrote in June 2010, and they basically started realizing this happens in, let's see here. This started happening, back at the start of the 2000s.
Mm-hmm. For 20 years.
Within
this has been going on for 20 years.
Oh yeah, well, 25 years. That's this behavior is what got me into gas prices, because this is fascinating how this works. Within the FTC's data set, individual cities, tend to either cycle in all years or they don't at all. Meaning that in areas where this happens, it happens. And markets where it doesn't yet happen, right? This is an all or nothing strategy. And either you're in a city where this is the strategy or you're not. And this strategy is growing. More areas are doing this because they find they can gain a competitive edge. So, if you look at this, what the FTC has found, and here's again, if you go on FTC, if you Google the term FTC price cycling, you'll get this working paper. And you're not going to want to go through all 29 pages, but essentially they find a price increase or restoration by one station is then followed by another station with then starts the cycle down. The FTC calls it cheating until the price is close to the marginal cost, which triggers another increase. And that's the game that's happening, Matt. When stations are undercutting too much, when they start losing money, that's what triggers the price to go back up. And what they're doing is they're restoring their profit margin.
But why is this all happening basically at this roughly the same time?
And
It might not be the same hour, it might not be the same day, but it may be the same week where the price cycling everywhere starts going. Yeah.
You know, this is the interesting thing here. Look at specifically, and for those listening, I'll read this. This is from the FTC. Specifically, our results show that recent price cycles began in the year 2000 and generally occur in 7 states. Now, this working paper is from 2010. So keep that in mind. This price cycling has increased in the areas. But the FTC says generally 7 states located in the Midwest. And we've called them out here many times. Illinois, Indiana, Kentucky, Michigan, Minnesota, Missouri, and Ohio. Prior to the year 2000, the FTC found no cities with price cycling. This is the first paper that has been able to identify when the cycling began and what cities began first. So, you know, I didn't know that we were going to delve down this rabbit hole, but they also call out possible price leadership by large chains. And they call out 2 retailers in the Midwest that have a significant presence in where they lead prices. So these 2 retailers are essentially price leaders. A lot of stations will follow them, Matt. And because of the amount of stations, like, you know, aside from these 2 brands, we're seeing a lot of consolidation, a lot of mergers, a lot of acquisitions. Companies like Sheetz come and go, Wawa, Casey's, Buc-ee's, right? There's a lot more. 20 years ago, it was like a BP or a Shell. Right now, you're seeing a lot more chains like Maverick, Sheetz, Wawa, Come and Go, Buc-ee's, 7-Eleven, right? There's a lot more big chains now. And so this is a strategy that a lot of them have done because they always want to have the lowest price because people are price sensitive and they drive to the station with the lowest price. So and this is a
a rubber band situation that pops it back into more of a sense of reality for the pricing, and that's
this is a way for those stations all to have the lowest price all the time, right? So they want to be lower price than their competition, but that can't continue forever, right? Because you can't continue to lose money. So once you get to the point where stations lose money, they raise prices back up, and everyone then follows that behavior too. Because the station is either forced with a decision, do we keep selling gasoline below our replacement cost? Or are we going to raise our price to follow the competition? So that's where this cycling comes about. So like I said, more and more markets are engaging in this price cycling behavior. So even if you're not in the Midwest or Florida or St. Louis or some of the markets, this is something I just mentioned. This started in Denver this year. So you know, this is happening.
Denver may not be liking that a whole lot. I don't know. Well, I'm so on the fence with this, Patrick, because like I said, I was thinking I was going to pay $2.89 a gallon. I was all excited. I get to the pump and I mean, boom, it was $3.09. So what did that cost me? 20 cents more per gallon in a matter of moments. So I'm like,
well, and let me highlight too, Matt. I'd like to highlight here Denver because we said that Denver doesn't engage in price cycling. Looking at last year, look at this is a nice smooth graph in 2023, and then boom, right about December 17, we see this specific market. If I zoom in here, that looks an awful lot. It's not as well established yet. Right, this new behavior.
Because it sounds like one of the leaders in that particular market started introducing it, and everybody's playing catch up.
Yes? Well, it takes a little bit of established time for stations to be like, oh, hey, look at our competition, right? The strategy changed, so it's taking stations in Denver a little time to realize this and to get on board. So, you know, if you compare this to like a market like Ohio, the price cycling is not nearly as defined just yet. Although it look at that. Denver, compared to this, it is starting to look a little bit more defined.
Mm-hmm.
So This is a trend that's growing. So anyway, I'll stop there. And if you're listening on Spotify or Apple Podcasts, if you want to see the specific details of what price cycling is, I would encourage you to go on Gas Buddy's YouTube channel, and you can look at the specific charts we're referring to. But just know that this price cycling, if you have it, it's like a roller coaster ride, looking at the charts and gas prices up, down, up, down, up, down. Whereas if you're not in a price cycling area, prices move more on a daily basis. So Matt, that's a cycle you need to get used to in Kentucky there, because the FTC has called out that it does happen. So
do you ever foresee them doing something about it where they are going to say, okay, hold on, we think we need to step in and moderate prices? Do you see that ever coming to play, or do you think we're pretty good to go?
I think
it's certainly not. It doesn't seem to be price gouging, and I don't want to even hint at that. It doesn't seem to be that at all. It just seems to be, like you said, it's actually more of a consumer-friendly situation than being against the consumer. And I want to be very clear whenever I bring that to point. And
I'd like to bring up, the FTC did look at that, and I'm going to share what they have found, and I'll say what they have said. That price cycling cities are weakly associated with lower retail prices. And I believe later in this report, if I find it here a minute while we talk, I believe that this report also says that this ultimately this behavior, price cycling, saves consumers money in the long run. Yeah. But a lot of it can save consumers even more money when they are shopping around and they know this price cycling happens.
Which is, I guess, an overall very good thing, because you can.
I don't know if it's a very good thing, but again, if you're very in tune with this behavior, right? The Gas Buddy app also sends out push notifications when prices go up, and that's why that story from WTHR that I participated in also shows you that this happens, but they also show you what you can do about it. And the bottom line here is, be aware that this cycling happens, and potentially sign up for the Gas Buddy price hike alerts.
Absolutely. I do have that, and I do enjoy it, by the way. Most of the time.
It's never fun when you get the alert, because the alert, when you get those price hike alerts, that means that I have gone over and verified that this is happening. So a human has verified that you're about to see most stations go up. And what we do is, because we get a lot of data, thankfully, from our price spotters, and continue to send us as many updates, even if it's the same price, send us an update, because then we have another, when prices hike, Matt, very quickly, it becomes a question of, okay, did the station go up or not? And so people
basically in the app confirm that the price is still the same for the last quarter, because I do that a lot.
Even if the price is the same, update the price, because that we will have a more recent time then that we know that station hasn't gone up yet.
So that's a very good habit to get into. Like, whenever I sent you the picture of the price at the station that I was at the other day, yes, of course, I was in the app and I confirmed everything. Yes, this price is now $3.09 a gallon instead of somebody else had beat me to it. It moved, but it moved so quickly. It was a matter of an hour or two, and I'm like, oh, I've got a little bit. No, I should have jumped right in the SUV, dropped everything that I was doing, and said, Patrick, we'll record this later.
It does move very quickly.
It does.
It moves extremely, because stations in these areas have gotten used to this. And stations are surveying each other. So when one station sees the survey, and a lot of times this is now computerized, where they may get a notification that their competition went up, and they're like, okay, we're going to go up too. So you have to do it very quickly. Now, some stations are laggards. They don't all look at their price that quickly. They don't all have these site surveys that they do. But generally, these price increases move fairly quickly. But for the rest of us, Matt, that don't exhibit price cycling, it's a completely different ballgame.
Okay, so let's move on from this for just a moment, because I feel like at times we're kind of like a broken record, yet we kind of have to keep addressing it, because all the politicians keep saying that they can control gas prices and oil prices and all of these different things. So it's almost a constant combat of taking the information and basically setting the record straight. So,
Right.
taking, for example, geopolitical issues. This past week, since the last time we recorded a podcast, Ukraine decided to invade Russia and take Russian soil, probably for what is generally thought of as being as a negotiating tactic to getting to an eventual ceasefire and dealing with Russia being inside portions of Ukraine. Um, that has a potential of, I mean, really being interesting. Like Ukraine has just reported the largest surrender by Russian troops of the war. There's a lot of things that are going on there where I won't call it a powder keg, but certainly you could, I mean, one wrong move in one direction or another, and we could be in a very hot, volatile situation really quickly. Plus, before you comment, we also have Iran saying, oh, well, by surprise, we will choose to attack Israel, basically. And Israel is saying, if and when they do it, it'll be by complete surprise, and it is expected to be large. The United States, even the Defense Department saying, hey, we have expedited and told our ships to speed up, quickly get to Israel as fast as possible. We are sending a submarine. And by the way, they're doing that intentionally, letting it be known what they are doing as a way to try to kind of calm things down and say, look, don't do what you're about to do. There's so much going on.
Well,
let's talk about that. There's a lot of stuff right there that's just like itching right there to push the button, and it is a little concerning.
Yeah, well, and let's get down to that, because what's been happening lately, to your point about Russia and Ukraine, making incursions into Russia, has been notable. That's significant watching, but the more significant factor has been these drone attacks that Ukraine has been launching on Russian refineries. That's been really a huge issue, because Russia, in addition to producing a lot of oil, they export a lot of oil, and they export a lot of gasoline and diesel. But Matt, these refinery attacks, the drone refinery attacks, have actually been impacting Russia. Now, if we can get rid of that graphic, I'd like to show you. I had a headline pulled up here that highlights the exact issue here.
Absolutely,
is that this is a big deal, because in the last couple of weeks, the drone attacks have knocked out Russian oil refineries, which is problematic because Russia, as I mentioned, exports a lot of gasoline and diesel. But now Russia had said that they made repairs to their refineries. However, yesterday, they extended a gasoline export ban. So what does that tell you, Matt? If you fix your refineries and they're producing gasoline just fine, you would not need to extend a export ban. Essentially, what Russia is saying or suggesting is that some of the refinery issues are still leading to a situation where there's not enough supply in Russia, and they need to ban exports because they need that gasoline in Russia. So this headline is actually really critical, because it's extending its export ban on gasoline all the way to the end of the year. Yeah. Now, last year, they also banned the export of diesel. And again, because Ukraine has been launching attacks on Russia's refineries, this is problematic, because Russia is a major exporter. And if Russia's refineries aren't able to produce, this is the part of the Russian-Ukraine situation that the oil market is watching very carefully. And on the Iran side of things, as you mentioned, Iran is a major producer. And if something happens with obviously Iran has been aligned with Hamas and Hezbollah. So if Israel has been going after Hamas and Hezbollah. If Iran chooses to react because of the Israeli incursion onto Iran's territory, to carry out those attacks, if something happens to Iran, it could be a problem.
Yeah, and, it's a lot. There's a lot going on there,
and there's also one thing,
keep an eye on.
To mention too. I don't know if you've ever heard of this vital piece of infrastructure, but to draw into Kark Island is an island basically about 15 miles off Iran's coast, northwest of the Strait of Hormuz. Now, Iran has threatened to block the Strait of Hormuz in various weeks. Now, that would be very difficult. The other vital piece of infrastructure is Kark Island. And this has been handling basically the entirety of Iran's oil exports. It's an island out, as I mentioned, in the Persian Gulf, southeast of the Strait of Hormuz. And this is basically the entirety of how Iran exports oil. So keep in mind.
Is that one island?
Yes.
I did not know this.
So it's directly
This is
connected.
interesting.
It's directly connected to Iran's oil fields. And this is generally how Iran is exporting oil. So here's the thing. If Iran retaliates, Israel then could imperil Iran by potentially launching an attack on Kark Island. So
now you can't tell me that all of this would have zero impact on U.S. prices, right?
Well,
Or
no,
crude
exactly,
oil.
it would, and that's why
That's concerning.
That's why Kark Island is and let me share. See if I can share this other window here with you to zoom in a little bit more carefully. I don't know if I can.
I'm intrigued by all of this, and also a touch concerned.
Yeah, I don't know if I can. I'll try and load it here real quick. But essentially, this infrastructure is huge. And okay, here I've got it pulled up. So, and those listening again, this is why you may want to tune in. If you look at this island here, Matt, like look, here's the actual port. Much of this island, if you notice, look at all the different massive storage tanks.
That's a lot. Yeah.
And so this is where this island is kind of a key critical piece.
And for those of you listening, by the way, we're talking several dozen tanks that it's not just about, a handful. I mean, it's a
And so here's, the Strait of Hormuz down here. But again, this is potentially, and to zoom out in the Middle East, this is where Kark Island is. And again, this is critical to Iran being able to export oil. So I'll get rid of this, but this is the detail to watch. Again, in the Russia-Ukraine situation, keeping an eye on Russian refineries, and in the Iran situation, Kark Island could potentially be something to keep an eye on as well.
And it is not far from Kuwait or Iraq. It is in the northern part of
the Persian Gulf. Yeah. So I mean, this is, and look, Israel would have to be very careful, potentially approaching this, but there's a lot of oil in this region, and that's long what oil markets have feared, right? Is the potential for violence to spread beyond Gaza. So that's something we continue to watch. Oil prices, and by the way, this is just the Middle East part of it. Not to talk about all of the different economic data, Matt, that's been coming in, right? Unemployment, jobless numbers. We have retail sales that was better than expected. And so the Dow Jones today is skyrocketing again because we're getting all these various economic signals. And the price of oil has been just all over the map the last couple of trading sessions. But interestingly, Matt, the price of gasoline the wholesale price of gasoline has really struggled. So potentially some good news there is we're getting to the end of the summer driving season. There's not a whole lot going on, out in the Gulf. But I'll screen share the price of oil here. And it's just been, up, down, up, down. Now we're on our way back up. So, ocean motion, I suppose, this constant waves, constant cycle of the price of oil. Yeah. We were high, we fell, then we went back up, then we bottomed, and now we're on our way back up. But now, the only reason oil is back up today is because that better than expected retail sales is probably boosting the potential the Fed's going to cut interest rates in September.
Yeah, I want to show you a story here really quick from the Jerusalem Post. It is kind of hot off the presses, so to speak, just very recently within the last hour or two. So while we are recording this,
Terrific.
That is, yeah.
Always love sharing late breaking developments with our crowd.
Yeah. So for those of you who are listening, the title of the Jerusalem Post story is Iran seems to reconsider retaliation strategy, economic risks amid cyber attacks, according to an expert. Let's go on down to the story for just a moment, saying that Tehran is reconsidering its approach to retaliation against Israel following the assassination that took place. And they're crediting that it is mainly due because of the American buildup in the Middle East, according to this professor.
Yeah. As you mentioned, we've been sending a couple warships that way.
Yeah. So I mean, this is obviously something that we want to very much keep an eye on. That would be excellent news. Is there a price point factored in with regard to crude oil that if they choose not to retaliate, that you would see prices go down? Or has the market kind of been like, meh, let's wait and see what happens before we move prices in up or down direction? I mean, what are we seeing on that regard?
Well, think of this as a tug of war. On one side, you have bullish factors, including the Middle East, potentially. That's more of a bullish factor than a bearish factor, at least at this point. You have Russia, Ukraine. And then on kind of the other side of the equation, too, is, we're in the midst of, we have been in the midst of an economic slowdown, but now we're getting data that suggests that we may or may not be in a recession. That's pushing the market. The potential of an interest rate cut is pushing the market. And the price of oil, as we just showed there, it's been all over the map. Up, down, up as high as 80, down as low as 72, then back up to 78. Oil is, and this is a great highlight, oil prices are not determined by a company. They're determined by a balance of everything we're mentioning and how those different news stories could impact the flow of oil, the supply of oil, the demand of oil. This is a good economics lesson, is that because if the economy does better, it's going to mean more demand. If the economy is slower, it's going to mean less demand. We're coming into a time of year that Americans start driving less. Schools are reopening, and that leads to a natural decline in prices in the fall. It's not because of the election. If the election was in the spring, gas prices would go up, right? Because it has to do with seasonal differences. And so a lot of these news stories matter. Just we don't know the way things are going to go. But if something were to happen in the Middle East, it probably would be an upside to oil, right?
I mean, yeah, that would be the
if there was
hope that
peace in the Middle East, it would be a downside to oil. So if there's more risk, prices go up. If there's less risk, prices would go down. Essentially, oil hates turmoil. And if there's going to be more turmoil, it means more higher prices.
Yeah.
So
oil's not the only thing that hates turmoil. Yeah, but yes. No, I see what you're saying here. And so we will definitely be monitoring that. If Iran really doesn't do anything in retaliatory toward Israel, and then think about the powder keg that could potentially open. I know we had kind of an interesting concept back in April where Iran basically signaled, here's what we're going to do. Yeah. And the U.S. is kind of like, well, we're going to put together this coalition and here's what we're going to do. So it was mostly for show, so that the Iranian people, the government could save face with their own people.
Propaganda, to be blunt. Baby.
Yeah, right. And so this time around, I don't know that would be a situation in hand. So I mean, this could be a very volatile situation if the first shot is fired in one direction or the other in that regard. Not so certain that it would be just for show this time.
And to your point, that's why, the U.S. is stepping up efforts to try to deter Iran from escalating, because the U.S. knows if Iran escalates, then Israel is probably going to respond. Well, so, sure. That's why a lot of diplomacy has been happening. And the U.S. is building up a military presence in the Middle East to potentially disincentivize Iran from responding. Now, I think Israel has gone a little rogue. I think Netanyahu, there's been a lot of disagreement within Israel itself on how to respond. So that's been a wild card as well.
Yeah, it's yeah. I don't even know what to say beyond yeah. We got a lot there.
Well, all of that's out there. Yeah, Absolutely. Well, let's take a minute to kind of give our listeners and watchers a little bit of a scorecard on how that's all translated to the pump, because we really haven't done a whole lot of that just yet. To pull up our
Yep.
latest figures here, most areas have seen a monthly decline. We are kind of in the dog days of summer. Gas prices have given up some ground. This table here showing that most areas, most states, with the exception of Ohio, Colorado's up from a month ago, Wyoming, Utah, Wisconsin's up from a month ago. Most areas are down from a month ago. So that's the good news. We already highlighted that everyone's lower than a year ago. Where do we go from here? Well, Matt, obviously we've highlighted some of the uncertainties in the Middle East. We also have Hurricane Ernesto, who's staying away from the U.S., but keep in mind, in about a week, we're going to be entering the peak of hurricane season. So that it's not over yet, but generally speaking, gas prices decline as we get closer to the end of summer. Why? Because Americans, as we mentioned, are driving less, schools are reopening, and because over the course of the summer, supply of gasoline has been built up, right? So supply is pretty adequate. And we're only, by the way, a month away, actually a month from tomorrow, we're going to be switching back nationally, the exception of California. Most of the nation is going to be switching back to cheaper winter gasoline. And that also helps to lead to a little bit of price relief. So, Matt, over the next couple of weeks, we should head down, barring something in the Middle East or a major hurricane or refinery outage. And I would say probably by Halloween, I would bet my top dollar that gas prices in probably at least 45 of the nation's 50 states will be lower by the end of October than they are today. So,
boy, I hope so.
Mostly good news. And by the way, I would expect by the end of October, tens of thousands of stations, probably primarily in the Gulf, the Midwest, the Great Lakes, maybe the Rockies. Maybe the Rockies will be below $3 a gallon. Certainly not all of them, but I would say that by Halloween, Matt, we could see 30,000 stations below $3 a gallon. And by the way, there's about 150,000 stations in the country. So that's a pretty good amount.
Yeah, no, again,
and by the way, I don't want to forget too, one really important thing happened this week to diesel. The average price of diesel fell, and Matt, I'm gonna stick you on a guess. How low did diesel fall, or what metric? Diesel prices fell to their lowest level in X years. How many years?
Oh, it'd have to be in the past 5 years, right? Because of COVID?
So we are now at the cheapest price for diesel since early 2022. That's about 900 days.
Yeah. Since
diesel prices have been this low. And again, if I zoom out here, here's the invasion, the Russian invasion of Ukraine when oil shot up. We are now basically at the level diesel prices were just before that happened. Where are we today? We are at about 370-ish. If I can get my cursor to start working again. There we go. 373. There we go. Right there. About the same as February 2022. So it's not only good news, but by the way, I've been getting questions on social. If you have a heating oil tank, because heating oil and diesel are essentially the same thing, I think we're on the cusp of wanting to fill that up. Because typically diesel prices, look what happened last October. $4.87 in October, $5.32 in late October. Now, there were some refinery issues.
So, and the diesel, if they fill up now, it's not going to begin becoming issues throughout the early winter months or anything.
Unlike gasoline, diesel's much more stable. Yeah. So if you have a home heating oil tank, if you live in the Northeast, you're probably getting real close to maybe seeing the best price that I believe we'll see, especially if there's an economic rebound, Matt, because think of those trucks, construction equipment, trains, all of that commerce generally uses diesel. So keep that in the back of your mind as well, that if there is an economic resurgence, if there is an interest rate cut, that's probably going to prompt a little bit of growth in those sectors, which is going to mean more diesel consumption. So home heating oil folks may want to consider filling up soon.
All right. Well, we are basically out of time, but very quickly, we do want to mention something, which is Washington, D.C. You and I will be actually hanging out together in real person. And those of you listening right now, you will actually be able to listen in front of a live studio audience, as I like to call it. We'll call it a classroom audience, but nevertheless, it's still an audience, and we'll take
Q&A. Yeah, they can throw anything
it's a
at
Q&A.
us.
So
hopefully not any whipped cream pies.
This is going to be quite fun, and this is going to be what, next week? A week and a half from now. So basically,
2 weeks
week and a half
today
from
we'll
now.
be on our way home, but next week we'll probably tease it again. But yeah, Matt, looking forward to connecting with you in DC. Should be a fun time, and we're going to be talking about two different things. Number one, doing a podcast live. Number two, maybe we'll turn into a podcast, and we're going to be talking about the potential differences in policies between the Trump campaign and the Harris campaign. So
yeah, lots of stuff going on there.
Analysis
for sure.
there.
Well, I tell you what, Patrick, as always, I have enjoyed this podcast. I don't know about you, but I know that coming up, we will, of course, be keeping you up to date. And for those of you watching the longer podcast, we also do kind of a 90-second abbreviation with regarding to gas prices themselves. You can find that on places like Facebook Reels and TikTok and other aspects. A little expansion of Over a Barrel.
There you go.
We want to make sure we cross-promote as well. So I have a lot of fun doing this. I know you do as well. And again, for those of you joining us, thanks so much. We will come up to another Over a Barrel podcast next week. Of course, if anything happens between now and then that always requires a special edition, we always do it. And sometimes we even do it live on
got you covered.
Known as Twitter. Yeah,
That's right.
Hey, join us again coming up next week.